Have you ever heard that job title, Research Analyst, and kind of wondered, what do they actually do all day? It's one of those terms that gets thrown around a lot. Sounds super important, right? But it's a bit of a mystery. Well, today we're going to open up that black box and figure out what's really going on inside. And to do that, we're not going to start with complicated stock charts or dense financial reports. Nope. We're going to start with something way more familiar. Let's talk about buying a new phone. I mean, really think about it. The moment you decide, okay, it's time for an upgrade, what's the first thing you do? You don't just wander into a store and grab the shiniest one, do you? Of course not. You've got a process. And I'm willing to bet your process looks something like this. First, you figure out how much you're willing to spend. You set a budget. Then, you probably narrow it down to a few brands you like or trust. After that, you get into the nitty-gritty, right? You're comparing camera specs, battery life, screen size, all that stuff. And only after all that research do you finally pull the trigger and make a decision. Well, guess what? That whole process, gathering all the info, weighing the pros and cons to make a smart, informed choice, that is exactly what a research analyst does for a living. The only difference is they're doing it with multi-million-dollar companies instead of smartphones.
Okay, so here's the official textbook definition from SEBI, the Securities and Exchange Board of India. Yeah, it sounds a little dry, but it really just boils down to that same idea we were talking about. They do all the homework so that other people can make smarter decisions with their money. Simple as that.
So if they're doing all this homework, where are they getting their information? It's not just a quick Google search, I can tell you that. You gotta think of an analyst as a detective, following a trail of clues that starts really, really big and gets super specific. The whole process works kind of like a funnel. At the very top, the widest part, they're looking at the huge picture stuff, the macroeconomic data. We're talking government statistics, reports from the central bank, what the IMF is saying about the global economy. Then they narrow it down a bit to the specific industry. They're reading trade journals, seeing what the competition is up to, and finally, they zoom all the way into the company itself. This is where they're reading annual reports, maybe even visiting a factory or sitting down for a meeting with the CEO. All right, now this is important. Not all analysts are created equal. In fact, there's a huge difference in the industry between what we call sell-side and buy-side analysts. And what separates them really just comes down to one simple question. Who are they working for? Let's break this down. Sell-side analysts, they work for big investment banks and brokerage firms. And their research reports, they publish those for the public. That means you, me, anyone who's interested can read them. Now, buy-side analysts work for places like mutual funds or pension funds. Their research is totally private. It's for internal use only, created to help their own fund managers decide where to invest the fund's money. So one is writing for the public, the other is writing for their own team. It's a huge difference. But wait, there's more. There's actually a third player in the game, the independent analyst. These folks are often specialists who run their own smaller boutique firms. They're not tied to a big bank or a massive fund. Instead, they sell their research directly to clients, maybe on a subscription, or they do super customized work, like deep dive analysis for a company thinking about a merger. Okay, so the analyst has gone through the funnel. They've gathered a mountain of information. Now what? How do they turn all of that data into a simple, clear, final call? Well, this is where the real magic happens. It's part science and part art. They're basically looking at two different types of things. First, you've got the quantitative factors. Think of this as the what. These are the hard numbers, the stuff you can put in a spreadsheet, revenue, profit margins, cash flow. But just as important, if not more so, are the qualitative factors. This is the why. It's the story behind the numbers. How good is the management team? How powerful is the brand? Does this company have a secret sauce, a competitive advantage that nobody else has? Here's a fantastic way to think about it, especially if you're a cricket fan. Think about two legends of Indian cricket, Rahul Dravid and Virender Sehwag. Both were in the same business, scoring runs, but they couldn't be more different. Dravid was the wall, super defensive, methodical. Sehwag was an absolute firecracker, all-out attack from ball one. A good analyst has to understand not just the stats a company puts up, but its style, its strategy, its personality. And this quote from the management expert, Dr. Gary Hamel, really just hits the nail on the head. It's not just about who has the better product. The analyst's job is to look deeper and understand the entire system, the business model that lets one company win while another one struggles. And after all of that, all the deep analysis, the numbers, the stories, the business models,
It all gets boiled down into one of three incredibly simple, direct recommendations. You should buy the stock, hold on to it if you've already got it, or sell it. That's it.
Finally, this is not a job you can do without a rock-solid ethical code. The entire profession is literally built on a foundation of trust. So there are some very, very clear rules of the game that every analyst worth their salt has to follow.
So what should they do? Well, it's all about being transparent and clear. You have to be realistic, you have to stick to the facts, you've got to keep it simple and explain any jargon. And absolutely crucial, you must disclose any potential conflicts of interest. Like if you're recommending a stock that you also happen to own personally.
And the list of don'ts is just as critical. No letting your personal opinions or biases creep in. No hiding those conflicts of interest. No making recommendations off the cuff without doing the deep research. And this is a big one. No guaranteeing returns. Their job is to analyze, not to look into a crystal ball and predict the future.
So when you put it all together, a research analyst is way more than just a number cruncher. They're a selector, sifting through thousands of companies to find the promising ones. They're an investigator, digging deep to find the real story. And ultimately, they're a guide, helping all of us make our way through the very complex world of investing. So the next time you see a headline flashing a buy or sell recommendation from an analyst, maybe you'll see it a little differently. Not just as some simple stock tip, but as what it really is. The final, tiny piece of a much larger, much more fascinating puzzle.